Have you ever wanted to know what stocks Warren Buffett is buying? Well, today I'm going to share with you exactly what Warren Buffett's portfolio looks like at the start of 2021. How's it going, guys? Ryan here and welcome back to another investing video, and today we are talking about Warren Buffett's stock market portfolio, what he's buying, what he's selling for the start of 2021, and I'm sharing this with you guys so you can see exactly what he is doing and if you want to follow in his footsteps. But before we get into that, guys, please remember to give this video a thumbs up. It helps me out so much with the YouTube algorithm, and subscribe for more investing, stock market and wealth management content. I'd love to know your thoughts after the video down in the comments section below on Warren Buffett's portfolio at the start of 2021. So without further ado, let's get straight into the video. For those of you who don't know who Warren Buffett is, he is considered to be one of the most successful investors in the world and the CEO of Berkshire Hathaway, the company or the hedge fund which he heads up. Furthermore, he is effectively a philanthropist, a business tycoon, and just an American investor in general. And as of the end of December 2020, he was worth 85.6 billion US dollars, which made him the fourth wealthiest person in the entire world. Now, here we can see Warren Buffett's portfolio as at the end of 2020 moving into 2021, and we can see it is quite large. Obviously, it is managed through his hedge fund, Berkshire Hathaway, and it consists of 47 different stocks worth roughly $269 billion, which is absolutely insane. And we can see there is an absolute variety of different holdings within Warren Buffett's portfolio, everything from Apple through to Visa, through to Wells Fargo, and some new companies which he's been adding to, such as Kroger, which we'll be getting into later into this video. But the key thing here is to understand that when Warren Buffett invests in stocks, typically what he does is buys and then holds them. That is Warren's investing strategy. So effectively what he's aiming for is that long-term growth, and if he can see an opportunity to reduce areas in his portfolio, he will reinvest that into existing assets which he owns or find new assets to get into. More recently, he's been focusing on getting into gold companies, for instance. Let's look at the buys in quarter 4 of 2020, which moves into 2021. What was Warren Buffett buying? Well, the first two stand out. We have Verizon Communications and T-Mobile, which are effectively both telecommunications stocks, which indicates that Warren is of the belief that telecommunications stocks in general are going to go up in the long term, and I would attribute this 100% to the fact that COVID-19 is making things a lot harder for investors and people in general to do business. So effectively, if you're working for a company, COVID-19 means you're working at home. What does that mean you're using? You're using the internet at home, you're using mobile services in order to perform your day-to-day business. And also on a personal level, if you're in lockdown, how are you going to communicate with people if you can't see them? Well, you're clearly going to be using your mobile services. So obviously you can see companies such as Verizon and T-Mobile are going to be bigger moving into 2021. And notably, I'd like to point out as well that the share change for Verizon was an increase of 88 million shares, and that is a 1.92% increase to his portfolio size, which is absolutely insane. Continuing this theme of COVID-19 causing companies to have to be innovative in order to be able to complete business, we have the likes of Kroger, which Warren is investing in. Effectively, Kroger is an online store for all sorts of things, but typically what we're talking is, your groceries. So basically what you do with Kroger is you order your groceries online and you can either get them picked up or delivered to your house. And obviously this is going to be a much more beneficial way to do your shopping during a pandemic, because the less human interaction you have, the better. So services such as Kroger allow you to do this. Now, the rest of the stocks, he hasn't increased in holdings too much, but three are ones that I'd like to focus on because they are the same type of companies. The first of which is Marsh & McLennan, a pharmaceutical company. Bristol Myers Squibb, another pharmaceutical company. AbbVie Inc., another pharmaceutical company. Effectively what we're seeing here is Warren is investing in pharmaceutical companies due to this pandemic once again. Obviously people are getting sick. What are they going to buy? They're going to be buying pharmaceuticals in order to better their health and recover. This is just the natural cycle of things that's going on globally right now, and it makes sense to invest in these companies, especially ones which are looking at things such as COVID-19 vaccines. If a company manages to create a vaccine, that drives their share price up due to the fact that it is in such high demand and there is little supply of it currently. And as a result, we are seeing an increase in value of these types of companies, but the pharmaceutical industry in general. Moving on to what Warren Buffett is selling, and I just want to take you back to the start of the video where I said Warren was buying gold, and we can actually see that now his gold play has not paid off. Barrick Gold Corp, he has sold 100% of his 12 million shares in the company, and the reason for this, in my opinion, is quite clear. You can see that since Warren bought this stock, the price has declined over that period. We also see Warren completely getting rid of Pfizer Inc., which is one of the first companies to produce a COVID-19 vaccine, and this is likely due to the fact that the same thing has occurred. The price shot up on the news of a vaccine and has been dropping ever since, and it has not been a good play for Warren, and now he's moving into other pharmaceutical companies which he believes will fare better. What we also see is Warren is exiting your typical large companies in order to fund other investments. So for instance, your blue chip companies such as Apple, such as GM, such as US Bancorp, such as JP Morgan, such as Wells Fargo. These are very large organizations which would be considered relatively blue chip and relatively stable. But Warren is opting out of these organizations to take on, I'd say, slightly more risky plays as we saw in the buys. But the reason for this is these larger companies aren't necessarily where the money's being invested. The small organizations which are being able to be agile and take advantage of the current climate are the ones which are performing well, and as a result I believe that Berkshire Hathaway and Warren can actively see this and are trying to capitalize on it. Unfortunately, they tried to capitalize at the start on obviously Barrick Gold and the Pfizer vaccine, but it's not paid off for them, so they're likely trying their luck elsewhere. Now, a very common saying which resonates with me comes to mind with regards to Warren's stocks, and that is water the flowers, not the weeds. And effectively what this means is if you water the weeds, you're effectively throwing your money away into companies which aren't going to grow. So for instance, Warren putting his money in Barrick Gold, Warren putting his money in Pfizer. These are companies which went up but then have been declining over a period of time. It doesn't make more sense to invest more money in these companies because it's likely that they're not going to get to those same levels, at least within the medium term. So as a result, what he's doing is he's cutting his losses on these stocks and he's able to focus his funds elsewhere. Instead, we're seeing a shift into the likes of Verizon and T-Mobile on a larger basis because the telecommunications providers are able to take advantage of this pandemic due to the fact that everyone still needs to communicate, businesses still need to operate, and what do they need to do that? Well, they need telecommunications companies to provide those services that enable them to make calls, access the internet, all those sorts of things. So effectively what Warren's doing is he's seen another opportunity here, and he's seen an opportunity to increase his holding in these types of companies. And obviously, as we saw previously, the pharmaceutical industry is another area of focus, but he's not betting as big on these pharmaceutical companies as he is in the telecommunications industry. And the reason for that, in my opinion, is due to the fact that the biomed and the pharmaceutical industry are extremely volatile, and the basis of the stocks in this industry relies on the value of the result from the testing. If testing on new drugs fails, the stock price drops. If it succeeds, the stock price goes up. And the issue with these sorts of companies is it's very, very hard to predict whether or not a pharmaceutical company is going to do well or do poorly in these testing type scenarios. So as a result, it's a much riskier bet, and Warren's putting a bit less money into it. And also the oil company Chevron, you would have noticed as well, is a small buy there. And I reckon he's seen a potential opportunity with now rising oil prices after they absolutely crashed due to the COVID-19 pandemic, and they are likely to rise, and companies such as Chevron will start increasing in value once again. And with that, I will wrap up today's video, guys. I hope you did enjoy it, and if you did, please remember to leave a thumbs up and subscribe for more stock market investing and wealth management content, and leave a comment down below on your thoughts on Warren Buffett's portfolio, his buys, his sells, and his current holdings in general. I'd love to know if you agree with what he's doing or you disagree with what he's doing. And with that, guys, I'll wrap up today's video. I hope you have an awesome day. I'll see you next time. Cheers.